In this video, I'm going to give you the most simple trading strategy that you can use to have confidence when trading ICT concepts. This is the model that my students and I use on a day-to-day basis to take high probability trade setups like this. This checklist will teach you the exact criteria that must be met for you to enter a trade. I commonly refer to this strategy as macro power of 3. A simple way to use time and price to execute trades with confidence. So let's go check out this strategy. So this is the main checklist that I utilize to engage with price. As we can see, this is the checklist for a bullish example. So number one, we must have a clear draw on liquidity. If there is no clear draw on liquidity, then we do not entertain a setup until we identify one. After we have identified a clear draw on liquidity, we wait for time to align with price. So what do I mean by that? We wait for price to enter a macro window, which is X50 to X10. For example, 9:50 a.m. Eastern Time to 10:10 a.m. Eastern Time is the 9:50 macro. After we enter the macro window, we look for price to deliver below macro's opening price. So we are simply just looking at what price the market is at when the 9:50 1-minute candle opens. That is your macro opening price. We want to see price deliver below there. In number 4, sweep sell side liquidity. So in other words, checklist number 3 and 4 here are accomplishing manipulation after we have identified a clear draw on liquidity. After steps 1 through 4 are complete, all we are waiting for is a premium PD array to be invalidated, or in other words, a candle to close above a premium PD array, which is a SIBI or a bearish fair value gap, as we will see in the examples, and this will be our entry method. And adjusting our checklist for a bearish scenario, we need to have a clear draw on liquidity, enter that macro window, deliver above macro's opening price, and sweep buy side liquidity. So the same thing as a bullish scenario. Steps 1 through 4, we've identified a draw on liquidity. Step 2, we are waiting for the specific time of day to align with price. And step 3 and 4 is accomplishing manipulation above macro's opening price. And number 5, all we are waiting for to enter our trade is a discount PD array to be invalidated, or in other words, a candle to close below that discount PD array. Let's go take a look at some examples. For example 1, we are going to be looking at NASDAQ's 1-minute chart. All of these executions should be done on the 1-minute time frame. As you grow as a trader and in your confidence executing on the 1-minute time frame, you will grow and understand when it is applicable to execute on the 30-second time frame. But until you get to that point in your journey, really just focus on the 1-minute chart. I'm not looking at the 2-minute chart. I'm not looking at the 3-minute chart, the 4-minute, whatever for executions. The main focus for entering the trade is the 1-minute time frame. And we are looking for that same checklist that we established in the previous 2 slides. So in this example, we are looking at a long scenario. So what needs to be met in terms of entry criteria for us to enter this trade? If you look in the upper left-hand corner here, we have our checklist. Number 1, is there a clear draw on liquidity? Yes, we have a high here, a clear high here, and another relative equal high falling short right here. So we can clearly say, okay, we can justify the market reaching up for higher prices to go and attack this buy-side liquidity. After we have identified our draw on liquidity, where we think price is likely to go, we are waiting for the time of day, which is our macro window. And this is the 10:50 a.m. macro, which of course, as we have already established, is 10:50 a.m. to 11:10 a.m. Eastern Time. Number 3, for a long setup, we want to see price deliver below macro's opening price. So as you can see here, where I have anchored MO, that is annotating macro open. So if you ever see that on my charts or any of my students' charts, we're talking about macro's opening price. And we can see that right at 10:50, the market is delivering below macro opening price. And look at number 4. What else is it doing? Sweeping sell side liquidity. So we're seeing the manipulation phase take place below macro's opening price. And most importantly, it's leaving us all that engineered buy side liquidity for us to target while the manipulation is taking place below macro's opening price. After the manipulation has occurred, number 5, what are we waiting for? A premium PD array to be invalidated. So we sweep this low. Do we come back up and close above a premium PD array? In this case, this SIBI or bearish fair value gap here. No, we push lower once more, deliver to this discount inefficiency, sweep this last 1 minute swing low one more time, and then we get our closure above our premium PD array right here. This is our entry. We are targeting the buy side liquidity that we have annotated here. And as you gain confidence in your ability with this model and just your trading in general, you want to take more conservative targets. So there's no problem with taking your position off at this more lower hanging fruit. And then as you grow as a trader, you hold to more aggressive targets for larger price moves. Now, a little gem I want to drop here, I have discussed on this channel before, but I know that many of you are just finding my channel right now. So what you'll see typically in my charts, if you ever see smokescreen, what does that mean? There are ways that I look at price to try to determine the likelihood of a fair value gap not being delivered to, or in other words, it being classified as a breakaway gap. So the smokescreen here is this high probability bullish inversion. HP just stands for high probability. And why is that high probability? The algorithm initially utilized that fair value gap to push price lower. So its initial state of delivery was bearish. Once we close above, that is your change in the state of delivery. And we're starting to see bearish premium PD arrays fail to act as resistance. So after we get that close above, I want to see this act as a smokescreen, or in other words, I don't want to see price deliver to any inefficiency below that high probability inversion. And we will see this in future examples in this lesson, and we will have future videos here on this channel really going in depth on that ideology. As we can see here, we close above. Do we come down to this fair value gap here? No, we do not, beautifully, and we start to expand to our buy side targets. Going on to the next example. Again, this is NASDAQ's 1 minute chart. You can see that we are looking at another long scenario. Number 1, our checklist. Do we have a clear draw on liquidity? Yes, we do. We have equal highs here, which is, of course, a common target and a strong draw on liquidity for price to want to gravitate towards. After we've established this clear draw on liquidity, we are waiting to enter a macro window. You can see for this example, we are operating within the 2:50 p.m. macro window, which of course is 2:50 to 3:10 p.m. Eastern time. And we're looking for the same criteria to be met for us to enter a trade. Price is going below macro's opening price. The opening of this 1 minute candle at 2:50, that is macro open. That is number 3, criteria being met. We're sweeping lows here, we're sweeping a low here, we're sweeping a low here with cherry on top, a signature of conviction that should give you higher confidence identifying these setups is if you see these SMTs occurring during these macro windows. We see that SMT here. We're sweeping sell side liquidity below macro opening price. The manipulation phase is occurring. And then we're closing above premium PD arrays. You can see that this one was utilized to send us lower, similar to the previous example. We close above it. The retrace into it can be an entry. You want to see any inefficiencies below there remain open and classified, of course, as a breakaway gap. And I'm telling you guys, this smokescreen and breakaway gap 1-2 punch, you are going to see, if you haven't already, this occurring all the time in the market. And it's one of the strongest tools. It's one of my favorite ways to read price and tools as a trader in my skill set when reading these markets. It is so powerful and so interesting and fascinating to see. So let's move forward and look at our next example on NASDAQ's 1 minute chart still. Are we changing the way that we look at price? Am I changing the way that I engage with price? No, I am not. I'm simply being patient and doing nothing until these setups present themselves. So number 1, is there a clear draw on liquidity? We have opening range high, which is a session high. We have a swing high falling short of that here, another swing high here, another swing high here, and internally, more within the middle of the range here, we have a high here and a high here. So we have a lot of buy-side liquidity built up. After we've identified a potential draw on liquidity, we are once again waiting to enter a macro window. This is the 1050 macro, and what are we seeing? This is macro's opening price, this down close candle where I have this line MO, macro open anchor 2. Price is going below there, leaving the buy side liquidity for us to target. That's what we want to see, as much buy side liquidity left behind for us to target. It's going below macro's opening price, sweeping sell side liquidity. And just like the previous example, we have another SMT during a macro. After steps 3 and 4 have occurred, we are looking for step number 5, a premium PD array to be invalidated. And what is this? It's an inversion, but what was it utilized as for its initial state of delivery? Lower prices. Once we close above, that's not only our change in the state of delivery, but that is our entry method and confirmation that we are going to go and attack the buy side liquidity. We can see that once again, this high probability bullish inversion was our smokescreen blocking price from getting down to this breakaway gap. Let's continue forward and look at another example. So this is still, of course, NASDAQ's 1 minute time frame. And here we're looking at a short scenario. Number 1, is there a clear draw on liquidity? Yes, we have this low here. We have lows internally, and then we're seeing our checklist start to be met. We are entering a macro window, the 7:50 to 8:10 a.m. Eastern time macro. We are seeing price go above macro's opening price. So again, just so we're clear, right here, this up close candle, this opening price at 750 on this 1 minute chart, that is your opening price. We're seeing price go above macro's opening price, sweep a high here, all these highs, and then all we're waiting for is a closure below the discount PD array, which is a BISI here, another BISI here. So you're seeing bullish structure, bullish order flow start to break down, which should tell you that this leg up was a false move, if you will, and now we're starting to attack lower prices. Price closes below this BISI, returns into it, and once again, look at how this inefficiency above was not met, because this inversion is our smokescreen creating this breakaway gap. So we don't want to see price get there. Price comes up into this, cherry on top. We have an SMT with the S&P 500 in this particular scenario, and we expand lower to our sell side target. For our next example, we are still on NASDAQ's 1 minute time frame, and we're looking for the same signatures in price. And I hope you guys are getting bored because you want your trading to be boring. This is what you're looking for on a day-to-day basis, and you're doing nothing in between these setups. So, do we have a clear draw on liquidity? We have a high here. We have another high here. All these little highs here, kind of a low resistance liquidity run signature here. And we're going below macro's opening price for the 8:50 a.m. macro window. So we're seeing step 1 and 2 be accomplished. Step 3 be accomplished as well. And what are we doing? Running a low. So we're seeing manipulation occur below macro's opening price. We close above this SIBI. Why is that significant? It was utilized to send us lower and sweep the sell side liquidity. Now you might be saying, why is this fair value gap anchored that way? Take a look real close at where I'm anchoring those and start to study and dig into these types of candles. I will cover it in a future lesson here on the channel. But we can see that that inefficiency was utilized to send us lower. So once again, its initial state of delivery was bearish. We close above. We come back into this high probability bullish inversion, which is our smoke screen. We have a BISI here. That's a breakaway gap. Of course, by extension, this BISI here as well would also be classified as a breakaway gap, and we wouldn't want to see price go below it. And we see expansion to our buy side liquidity target. So if you guys enjoyed this video, let me know in the comments, give it a like and a subscribe. If you guys have any questions, please be sure to leave them in the comments, or you can join my free Discord. That link will be in the video's description. And don't just take my word for the examples that we see here. By no means is there going to be a setup every macro, and that is the hard part. You just have to wait for this criteria to be met. And as I've mentioned a couple times throughout this video, you just remain patient and do nothing until you see this 5-step checklist be met. So good luck and good trading, and I will talk with everybody soon.